You're not going to outsmart the market, but what you can do is leverage your family resources to make the best tactical decision you can.
Welcome back to this week's episode. I'm your host today, Kevin Chamala, and with us is Executive Chairman of the Masiello Group and noted industry trendsetter and luminary, Chris Masiello. Thank you for joining us today.
Hey, Kevin, good to be with you.
And so we're heavy into spring now, and what we want to do today, since we've had a different couple conversations over the last few weeks, which I think have been informative based on the topics at hand, but I wanted to kind of bring us back in a reset, right? Give our audience a good reset and a pause from all the noise that's been happening in a couple of weeks and get back to the conversation at hand of where the market is today, what's happening with rates, and what that all means for our consumers who are shopping for houses or looking to sell. And so let's maybe start with the easiest conversation, because it's always top of mind for all of our consumers, are rates. Recently, which we'll post the articles in the comments, so feel free to read the articles, but there have been numerous articles with a lot of experts out there in the industry who are all leaning towards that rates are going to stay stable for the majority of 2024. And so we want to get your viewpoint and take on what that means for our consumers and buyers and sellers.
Yeah, well, I'd put it in the category of there's news and then there's news, right? So it's neither good nor bad, right? It's just the fact that rates probably will stay, more or less the way they are. But there's really important reasons for that. One of which is that the U.S. economy is very strong. So inflation has dropped from, that 7, 8, 9% range down to the 3.5% range. So that's a good thing for the consumers, right? For all of us. The economy continues to be very robust. Hirings tend to be very strong. Wage growth is very strong. So again, that's all good. The other thing about the U.S. economy, though, which I think is something that maybe we take for granted because we live here, okay, is that the U.S. has the strongest economy in the globe. And so why wouldn't it be strong? And you consider the environment in which businesses, get to develop and do their R&D and for product marketing and all that. This is such a great environment here in the U.S. And the other piece to it is that it's the safest place. And so we're going to continue to have a strong economy, for the foreseeable future. Rates, I think, will eventually come down, but probably not much this year. But it's because the economy is doing well. And, there's kind of no bad to that. There's this interesting statistic that I ran across a while ago that 48% of all research and development capital investments are made in the United States.
Wow.
So think about that for a minute, right? So R&D for new products, whether it's technology, whatever the case may be, is made here because this is really the best place to incubate. And, not, of course, not to the detriment of any other country, but the United States is what it is. And so the good news is that we've got a strong economy, strong employment, strong wage growth. Yep, we got slightly higher interest rates. We got lower inflation. So our cost to buying our groceries and all that, has gone down. Although it doesn't seem like it at times. You go to the grocery store, but
right.
And housing prices continue to go up.
I think the stat I saw was they're still going up 45% year over year. So
yeah.
So that house you're looking at today that you're super interested in, that's $500,000, but you're scared of that interest rate, has potential to be, what is that, $20,000, $25,000 or the following year.
And we've said this, I feel like I say this all the time. So, for those of you who have heard this, you can just tune out for the rest of the show. But, the reality of it is that a slightly higher interest rate is a lot less expensive than a higher purchase price. Your purchase price is permanent, your interest rate's temporary. And so, for those of us, or you that have the capacity to do, the purchase now, do it now, because it's going to be a lot cheaper. You can always refinance out of your rate. The mortgage companies know this. They've got amazing products out there that will allow you to do basically no cost refis because they know rates are going to be coming down eventually. And yeah, I wouldn't wait. There's no tactical reason to wait. You're not, you're not going to outfox the market. Sorry.
Yep.
Okay. It's like people trying to time the bottom and top of like the stock market. Well,
Best of luck.
Yeah, good luck to you on that one. So you're not going to outsmart the market, but what you can do is leverage your family resources to make the best tactical decision you can. And that would be getting in sooner as opposed to later, or, if you're a first time buyer, or again, if you're in the move up situation where, you need to get a bigger house because the family's growing or wherever the case may be. Yeah, don't wait. There's no benefit to it.
Yeah, I think a good point to that, I've had conversations with coworkers and friends all the time about housing, and it always comes to shortage and things of that nature. But I think one of the tactics, especially if you're in a move-up situation, or even if you're a first-time home buyer, that I think people don't use often is if you're not able to find the home that you're looking in the direct community in which you want to be in, start researching and navigating adjacent communities, right? That might still offer the same benefits, maybe not all, but still offer the same benefits that you're looking for in your housing situation.
That is such a good point, Kevin, because every market is kind of defined as a primary market, a secondary market, and an outer market. If you look at it as kind of concentric circles, right? Like a bullseye.
Yep.
But because of the lack of inventory, what was once a secondary market to like the major community. So you take whatever the major community is around you, that tends to be the primary market. And then you go out into the suburbs or rural areas, they tend to be secondary. And then you go, very rural, or, by drive time, it could be, if it's a more urban area, they become your outer markets. Well, what's happened is that your primary markets have expanded into what would be traditionally the secondary markets. And so, looking outside of that, outside of what your primary market is into your secondary market, or what traditionally might be your secondary market, what's happened with inventory is that inventory has been, so compressed that the areas that might have been secondary and even outer have become preferred. And especially with things like high-speed internet, and, we've seen that in a lot of the communities in Hampshire, Maine, and Vermont, where markets that might have been considered, secondary or outer have become, very desirable because there's affordable housing, the communities are beautiful, the land is beautiful. And so, that's such a good point.
And as you'll find, right, as we say all the time, as you've said numerous times, if you're looking for that trend, you're too late. So you might, if you end up in that outer market, right, you might find yourself in 10 years having set the trend. Right, and then you'll then be able to take advantage of the gains you have in your purchase movements.
Yeah, usually by the time you've had the aha moment, you're behind the curve, right? Because typically you're not the only one that had that moment. Oh, that's how that worked, right? You're not the only one.
If you're the first, you're going to be Elon Musk, right? You're going to be one of the few billionaires out there in the world.
Correct.
And so, we talked about buyers. I want to just touch on our sellers here for a minute. And the advantages, we've talked about. Feel free to check out our other episodes of the advantages of working with a realtor and the benefits that brings to you, especially when you're selling or buying. But since we're talking about sellers, talk about some of the advantages of really taking a good scope of what it means to price your house correctly in this current market.
Well, again, as you pointed out, house appreciation is in that, call it 4 to 5% range, pretty much nationally. Some areas are a little bit more or less, but generally that's the number. You got to be careful though, not to lean too heavy into it. Like if your agent's telling you, your house is 400, which is the median price in the United States, right? It's 400. Well, that doesn't mean it's 450.
Right.
Okay.
Yep.
400 means 400.
Yep.
Right. I mean, it might be 409, or something like that.
Some wiggle room.
Somewhere, and then like we've talked about this before, you always have to measure your pricing based on your motivation. So if the house is at 400, if that's the fair market value that you're being advised on, and but you've got an imminent reason why you have to sell, well, maybe that 400 is a 395, and then let the market float up the price right above that 400 mark if there's capacity in the market for competitive bids. Exactly. If you got a little bit more time to burn, well, then maybe 400 is 405 or 409 or 407 or some number like that, but it's not 450.
Yeah.
And right, because there's just not that capacity in the market, and don't forget too, if you're a seller, you have to remember that when home buyers are doing their property searches, they of course search by price range. Right? Like we all know this, right? They've searched by price range. Well, what happens is that the listings come up, and they either come up in a vertical display or a horizontal display, but you can see the prices.
Yep.
So like you're kind of not kidding anybody.
Nope.
Right? I mean, like if you miss the mark, you miss the mark, because you are being compared to everybody else.
Exactly.
So there is that kind of truth in the market, so to speak, on pricing. And some markets, I was just talking to somebody this morning, one of the Massachusetts markets, and they were getting, listings that were priced right, that they're getting multiple offers. So still the multiple offer environment is there. I wouldn't say in every market. I would say that the multiple offer environment is there. And if you're more reasonably priced, that creates a little more tension in the market, a little more competition. And, maybe, you'll be in a bidding scenario where you can take advantage of a premium in the market. That's not everywhere, though. So I'd be careful about that. Your agent will know best.
Definitely, right? And I think to gump it down, using one of my favorite books, is price strategically. Don't price with your emotions. We are attached to our residences and the upgrades we've done to them, but it's very imperative that, yes, listen to your realtor and try to take as much emotion out of your strategy as possible.
Yeah, it's kind of a math. It is kind of a math. I hate to say this, right? But because like we're all attached to our homes, me included.
Yep.
But it is kind of a simple math equation, really.
Yep. So, it should be.
And one other thing, while we're talking about it from the seller's point of view, I know there's been all this, news and clickbait about, commissions and all that. But I just want to make sure that we throw this out here.
Mm-hmm.
The real estate transaction is the most regulated and complicated consumer transaction there is. The average buyer, this is just an average, so it'll be more or less depending on your type of property and your circumstance, but the average buyer, between down payment, moving costs, hiring a mover and cable and all this other stuff, right? And closing costs, okay, for financing, spends about $75,000 to buy your house.
Yep. It's
a smart move to assist the buyer in helping them get representation with their buyer broker fees, because an unrepresented buyer in a transaction, that's really dangerous.
Mm-hmm.
This is on average, the average house in the United States is a little bit north of $400,000. It's a big investment. As a seller, you want that to go well.
Yes.
Okay.
Yep.
And one thing is just, kind of just resist the temptation to say, well, that's their problem. Well, the buyer's problem is that they got to come up with, on average, they got to come up with about $75,000.
Mm-hmm.
So in essence, it's actually your problem too. Right.
Yep.
And so I think there's just a temptation, to say, well, that's the buyer's problem. Well, no, not really. It's the transaction's problem.
Correct. It takes two people to make that deal, right?
Absolutely. And look, a lot of what makes the real estate transaction expensive is it's heavily regulated.
Mm-hmm.
Now, I'm not going to add commentary to that. It just is.
Yep.
And that is not going away. So I would just encourage you to just talk to your agent about, as a seller, about, what should I offer for buyer assistance for them, for their buyer brokerage, because it will pay off in huge dividends to you. You do not want that thing to go south at the 11th hour. You just don't.
Yep. And to see more reasons why, we'll post the links to the other episodes we've done where we discussed that in a bit more detail, but I'm definitely glad you added that last point in there. And so why don't you close us out then? I think we've done a great reset here today about talking at the market, buyers and sellers. And as always, we like to leave them with a little closing point, whether about real estate or life in general. So I'll let you take us away here.
Yeah, urgency. There's times where you want to take things slow, and then there's other times when you want to act with urgency. And I think this housing cycle is one that if you're ready and all your ducks are in a row, so to speak, then you want to act. Don't wait. There's no benefit to waiting. Like you said, 5%. The house you're looking at now at 500 is 520. So
I love it. Urgency.
Urgency, right? The universe likes urgency. It likes speed.
Likes things in motion, likes action. Right? Yeah. And so thank you for joining us today, Chris. Thank you, everybody, for tuning in. I think this is a great episode to continue to share with your sphere, your friends, your colleagues, your coworkers. Please like and subscribe, and we'll see you next week for another episode of Change in the Market.
Great. Thanks, Kevin. Take care, everybody.